Hello, and welcome back to your South King County real estate update. Today is July 9th, 2021. I have a really exciting article to cover. The stats in it are just fascinating. So I'm like really looking forward to covering that one. But I'll go ahead and jump into my slides. My name's Sarah Eggleston with Stone Egg Realty at John L. Scott, and I do these shows every week at Friday at 3. So we'll go ahead and share. Okay, so again, I'm Sarah Eggleston with John L. Scott, Stone Egg Realty at John L. Scott. And what happened this week? So I got to deliver a giant check to the winner of the referral and review contest that I was running. I'm running it again. So there's going to be another drawing in 6 months. Going to continue to do these little $500 getaway drawings every 6 months. So your early July, the first week of July and the first week of January, be watching out for my drawings. But you can enter a couple of ways. You can send me your referrals either directly, or I'll post a link in the description in the comments after this video is finished that you can just fill out and it automatically enters you in the competition. Or you can leave a 5-star review on Google, Facebook, or Zillow. And so you can earn up to 3 points, 3 entries just through reviews, because you get 1 for each platform. So make sure to check the comments after this live is done. So what happened this week? So I'm really excited about this section of this show this week. This week, my husband and I actually went pending on a home in Kent. I'm super excited. It needs a fair amount of work, but I think we're up for the challenge. We got a rehab loan for it. So there's going to be some costs that are some of the renovation costs that are covered under our loan. So this is a really, it's not necessarily the easiest loan to maneuver, but I've done a lot of research on this and I am so excited to get going. And we had our inspection last night. So obviously it's not a done deal yet, but our inspection was mainly to make sure that there were no big surprises that needed to be repaired, and that what we were approved for would cover the majority of what we wanted and needed to do to the house. There's some things that I'm sure will not happen right away and will be done over the course of the next couple of years, but there's a few things that need to be handled immediately. There's a hole in the wall of the shower and in the floor of the right next to the shower in the floor covering, there's a tear. But overall, it seems structurally sound and mainly kind of cosmetic fixes and cleaning things up. So I'm pretty excited about that, to share that. And I am sharing this journey. So if you don't follow me on my business page on Facebook, make sure that you do follow that, because I'm sharing little tidbits throughout the journey. I checked in during the inspection just after the inspection was done last night from the house. And I'm excited to be sharing these little things throughout the journey. And after closing, I'll continue to share the journey of fixing up the home. So make sure to tune in for those. All right, now I'll get back into the slides. So this article was incredibly in depth. I'm going to do my best to cover it, but it was a very long article. And if you're interested in this type of stuff, I definitely recommend you go back and read the whole thing. So Seattle area home shoppers find some signs of hope, but prices are climbing at a daunting pace. So in some areas, it says the homes are up 30 to 40% from what they were a year ago. And I mean, that price increase is incredible and entirely unsustainable. It can't keep going at that rate. But it is just, it's been a crazy journey to watch all of these homes and the listing prices go up and up and up over the past year. And this person, this agent from Windermere said, some of my clients have taken a little break, and I have experienced this too. I was working with a few people that kind of like, we looked at a couple things and then they dropped out of the hunt, just because prices were going up so fast and there was so much competition for each home that the list price, it was often going above list price, and they just felt, you know, it was daunting. So there is a little bit of a slowdown happening right now, which is our usual summer slowdown. Usually spring and summer are like, at the beginning of summer are the crazy times in real estate, and then halfway through the summer things kind of start to calm down. People that have really need to move have often moved by that point. And generally that's just what we see, is more sales in spring and summer and fewer as we hit fall and winter. So but there's still a lot of competition for each new home that's on the market. People may not be offering quite as high of a price, but there's still a lot of them are still waiving inspections or financing or different contingencies that protect the buyer throughout the process. They're just saying, never mind, seller, I'm going forward with this, no contingencies. And that can be very risky. And like I said, on my purchase, we got an inspection, but I knew that there was a chance that our offer wouldn't get accepted because of the inspection. So that was a risk I was willing to take. Luckily, it worked out for us, but oftentimes, if there's other buyers that have waived their inspection, seller's going to go that direction instead. So median single family home prices did actually tick down slightly in June from what they were in May, but we're still up 19% ahead of where we were last June. So that's a pretty incredible increase for, you know, King County as a whole, and certain areas are just even more so. But there were more homes to choose from at the available at the end of May than there were before. So people are having a little bit longer to shop and maybe find the right home for them. So I did think that this was really interesting. In King, Pierce, and Snohomish counties, more new homes were listed for sale in June than any 1 month since May 2019. So this means we're getting our inventory back slowly but surely. But really, buyers are not seeing too much relief yet, because we're still at a huge lack of inventory. So even though we had more homes come to market, those homes just got eaten up by the demand that was out there. So I did notice that the condo stats looked a little bit better than they have been. So this notes that the pandemic era hesitancy about living in city condos seems to be fading. And so if we jump to the next screen, you can see that condo deals are up from June 2021 quite a bit, because in June 2021, people were buying single family homes a lot, but were kind of fleeing from the condo, from especially downtown condos or high density areas. So, but you can see that we're coming back. The percentage change in the median price is still up 9% in the Seattle area. Southeast King County is up 30% in their median prices for condos. So condo market's definitely making a comeback here. And so there's a lot of sellers that have been kind of overpricing their homes and having to do price reductions. This is something we generally see after a long period of price increases. Sellers think that it's going to keep going at that rate, and it's not sustainable. So we know it's going to cap off at some point and or level off, but there's been a number of price reductions in our market. So that is just a sign that buyers are pushing back against these high prices. But in the first half of the year, more than 4,500 homes in the Seattle area, greater Seattle area, sold for $100K more than list price. Whereas the same time last year, 380 sold for $100K over list price. So people are still in a lot of areas bidding well over the list price if the list price is reasonable. And they mentioned that although 2020 numbers are likely skewed, and I think it definitely skewed. 2020 numbers are definitely skewed by the pandemic. And yeah, basically there's a lot of competition for the lower priced homes. So those first time buyers that are a little more strapped for cash than the move up buyers or investors who have cash laying around have been struggling quite a bit. And you can just see, this just shows the graph of the median price for single family homes going up over the last year. So you can see the increase is quite significant all around our region. And that brings us to our market stat minute. We had new listings plummet last week, but I had predicted that they would jump right back to our lines here this next week because of the 4th of July weekend. It's not necessarily the best idea for sellers to list on a holiday weekend because a lot of buyers are out of town and won't see their home. So there's a lot of people that didn't list last weekend or on the 4th of July weekend that are listing now. So here is our month-end stats for South King County. And the red line's pended, so you can see that we are really about as high as we've been as for pendings right now. And the solds are just through the roof, pending and sold, and we're just lacking our inventory still. The back here in May of last year, you can see the for sale is higher than the sold because no one was buying homes. There was a lot of uncertainty as to what was happening with the pandemic. So people weren't making moves. But once they decided that they wanted that bigger home, bigger yard, and the pandemic was going to last a while, things changed, and our for sale the gap between the for sale and the sold is just widened pretty much this whole time. So then if we look at the sales this is the top line is sales price as a percentage of the list price. So you can see in March, April, it was 107% over list price for South King County on average, and 108 in May, and now we're dropping down to 106, which is still significantly over list price, yes. But this is kind of, I believe, signaling the signs of it cooling down from where it has been the last couple months. And if we look at our months of inventory, we are staying pretty steady at the 0.4 months here, and then this March at 0.3. March and April were crazy. So this was just a signal that I think that this was kind of like the peak of intensity, and we're seeing a little bit more inventory sitting on the market than we were in March. Our showings have come down over the last couple weeks but it's been it's ticked up a little bit this week, the end of this week. So, and this is for North America. And if you'll remember, last week we had an average mortgage rate or interest rate of 3.02%, or sorry, 2.98%, dropping below 3% for the first time in a while. And this week we see mortgage rates on the average continuing to fall to 2.90. So I have talked to a couple lenders about what's going on with rates. And it did tick up slightly today, as you'll see in just a minute. But overall, it seems like we are in another downward trend, which kind of surprised me. I didn't expect to see that this year necessarily, at least for such a consistent line. But yeah, as I said, so rates ticked up ever so slightly today, but there's this article, rates higher today, but lower this week. What's next? And this article, I am just touching on a couple things that they mentioned. So if you're interested in this, definitely check out the links after the live video. And this is interesting to say that, or they, in here, it talks about how back in February, we passed through this rate on our way up. So we haven't been at this rate since February, but there was a lot of reasons back in February that were pushing the rate higher. There was a lot of excitement over the vaccination rollout and kind of getting back to normal. There's so many things that were affecting it that I can't really get into all of it right now. But they definitely had reasons to move higher this year. And right now they're kind of ticking down, as I just said. So in the biggest of pictures, we can simply say that rates are deciding whether or not they're ready to move on from COVID-inspired all-time low range, and all of the above is merely noise. So, so they had this quote here. The common theme is that there were obvious reasons for rate to move higher after the 2020 doldrums, but now there are only slightly less obvious reasons for the rates to be leveling off. But you can see this is a peak for the broad measure of the US economy. And it seems like we perhaps peaked and are cooling off on our recovery. So there was a lot of excitement around opening up, and I think a lot of that is kind of cooling off a little bit, and people aren't spending money the way they were right away. So and this just states that we're still behind on job recovery, and the post-COVID growth has just peaked now and will be cooling off. And this is just a reminder of the power of one, our interest rate little metric here. So on the left-hand side, there's a 4-bedroom new construction for 680 is 81,875, and at a mortgage an interest rate of 3.25. This is kind of what a just shy of $3,000 a month payment will get you. Whereas if you look on the right, if it goes up to 4.25, it's still just under $3,000 a month, but you're heading down to the 590 level. So it's still 4-bedroom, 2.5 bath, but it's older, smaller, and probably in need of some updates. If you have any questions, please feel free to reach out. My phone number and email are on the screen there. My name's Sarah Eggleston with Stone Egg Realty at John L. Scott. And I do these updates weekly at Fridays at 3. However, just to note, I am taking next week off. I'll be out of town. So there will be no South King County real estate update next Friday. So I will see you on the following Friday. So 2 weeks from today, I will be back with your South King County real estate news. Thank you so much for joining me, and I will see you in a couple weeks. Oh, and don't forget to tune in for my little house purchase update videos so you can kind of follow me through the process. I'm looking forward to sharing that with you. Have a great week, and I'll see you, I guess, in 2 weeks.